From previous few days, market is showing a great recovery and we can see market in green zone, but actually this is recovery or not. But if we look at past few months, market was experiencing continuous decline where investors were worried about. But that was the case where value investors, those who hold for long term, have great opportunity of averaging their investments. And investors, those who invest through SIP, also have great opportunity at current market levels also. People having lump sum amount can also divide their investment into 2-3 parts and can invest strategically by doing proper research. Also nowadays ETFs are gaining lot of popularity and are great option for investment. They will diversify your overall investment portfolio. Also ETFs allow you to invest through SIPs. This approach will ensure you both capital protection and capital appreciation, and by combining these two you can create a strong basket of investment, and this will allow you to see your investment growing over the period of time. Also, this will make sure wealth creation as well as your capital amount will remain protected. So in today's video, we will discuss a very important point that you should keep in your mind while selecting an ETF for investment purpose. And at the end of this video, we will also discuss 5 ETFs that you can focus, that you can study for investment purpose. So hello and welcome you all to my YouTube channel Diversify Investment. I would like to request you that if you are new to this channel, please do subscribe and hit the bell icon for timely notifications whenever I post a new video. And if you find today's video helpful, I request you to like and share as much as possible. Okay, then let's get started with understanding ETFs, that is exchange traded funds. Just as the name suggests, ETFs are traded on stock exchange. Just like stocks, ETFs are also listed on stock exchange, and you can buy or sell an ETF through your stock broker. It simply functions like a fixed basket of securities, and their price is determined based on demand and supply. But it is important, if you think of investing in ETFs, you must firstly open your demat account. And secondly, the most important point that you should keep in your mind while buying an ETF, because this will help you maximize your return. If you keep this point clear in your mind, only then your returns can match with fund returns in the long term horizon. So listen carefully. When you invest in mutual funds, you receive units in terms of NAV, that is net asset value. That tells you the underlying value of stocks included in that mutual fund. But on the other hand, if we look at ETFs, they are more dynamic, and already I have told you that their price is determined based on demand and supply. So what happens sometime, if you try to buy all the stocks included in a particular ETF directly, you might get all that stocks, for example, in rupees 100. But due to demand and supply fluctuations, the current price for that ETF might be 110 rupees. This means that you are paying 110 rupees for something that is worth rupees 100, making it more expensive. In case of mutual funds, we look after NAV. But what to do in case of ETFs? How to avoid this overpaying for any ETF? Don't worry, it is very simple. If you want to buy an ETF, to ensure that you are buying an ETF at right price, you need to firstly visit Fund House official website, and somewhere in the fund details you will find their INAV. This INAV for an ETF is similar to NAV for a mutual fund. When buying an ETF, you should always check the difference between INAV and the real price at which you are purchasing an ETF. A small difference of 0.5% to 1% is okay, but if this difference is too high, then it will definitely hamper your returns in long term. If you buy an ETF 10-15 times more than its INAV, then it will definitely lower your returns. So if you want that your returns match with the fund returns, always try to buy an ETF as near as possible to its INAV. Now let's move on to the most important section that you were waiting for, where we will be discussing top 5 ETFs that you can focus on for investments. But before that, I would like to request you that if you are finding this video helpful, please like and share as much as possible, and don't forget to subscribe to my channel Diversify Investment. Coming on to today's list, the first ETF that I have chosen is Motilal Oswal's Mid Cap ETF. This ETF is for investors, those who are ready to take little more risk, because we know where there is a little more risk, you get higher returns from there. So the people who want to follow aggressive investment approach and want to invest in future large caps can consider this ETF for investment purpose, because mid-cap companies have strong growth potential and they eventually turn up large cap companies in the near future. This will help you diversify your portfolio and will reduce risk of investing all your money in a single company, because investing in a single stock is always highly risky. On the other hand, ETFs, there is lower risk as compared to that. This is because ETFs include shares of multiple companies that have strong growth potential. And secondly, if you want to invest in ETFs, there is no recommendation in this video. You must do your own research and analysis. You must evaluate any ETF based on its past performance. Also, you must analyze where that ETF is investing your money, in which sector and companies they are allocating people's money. And you must always evaluate its performance based on long term, because in short term you might see negative numbers. As for past 5 to 6 months, market was continuously declining, then it is obvious that ETF performance is also declining, and there you might see negative numbers. But if you look at long term horizon for 3 years, for 5 years, then you can get a clear picture about ETF's actual performance. But past performance does not guarantee future returns, but it is essential to study historical data. Only then you can analyze any particular ETF. You must study ETF's expense ratio and tracking error. It must be as low as possible. To find detailed information about an ETF, simply you need to search ETF NSE, and the first link will provide you all the necessity details about the ETFs that are currently listed in market. While purchasing an ETF, you must focus on these 3 factors. First is high traded volume, second is high liquidity. These both will make sure that you might not face any problem while buying or selling an ETF. Third one is high AUM, that is asset under management, that will ensure stability and will avoid liquidity issues. Now moving on to the second ETF in today's list that I have considered is HDFC Small Cap 250 ETF, which includes small cap companies that have potential to grow and become large cap companies in the future. But you should always keep it in mind, because it considers small cap companies, risk is always higher side. Because in bullish market, these small cap ETFs have higher potential to give excellent returns, and in case of HDFC Small Cap 250 ETF, their AUM size is excellent, which represents stability, and there are no liquidity issues. So this ETF can be focused for studying, and you may also consider this for investing, but based on your own research and analysis. Next, third is Nippon India CPSE ETF. The reason for selecting this is because some investors prefer stable and secure investment options over aggressive investing. For such investors, Nippon India's CPSE ETF is a great option, because this will provide diversification to your portfolio, as they include top PSU companies. This will provide proper sectoral diversification, which will reduce the impact of volatility on your overall portfolio. And all these companies included in this ETF are well established and have potential to show growth in the long term and deliver consistent returns. So you can also study Nippon India CPSE ETF for further details, and you can share your opinion in the comment section. Then number 4 in today's list is ICICI Prudential S&P BSE Sensex 30 ETF, which will provide great diversification to your portfolio and will also reduce overlapping with other investments. The point that you must remember is that lower the security securities in any ETF will tend to lower the tracking error. The ETF with fewer stocks will tend to have low management fees, that is low expense ratio. This is not always the case, but logically it happens in many scenarios. Low expense ratio, low tracking error will tend to increase your returns. So for investors, those who are looking for safety as well as they want equity exposure, Sensex 30 ETF is a great option. You can explore and share your opinion in the comment section. Moving on to number 5, that is ICICI Prudential Nifty Next 50 ETF. There is no liquidity issue in this ETF, as it includes large cap stocks that have strong growth potential in the future, and this will provide great strength and stability to your portfolio, and along with diversification, and it will make sure that your portfolio is well balanced. So now it's your time to tell us in the comment section which ETF out of these 5 you want to explore and want to get invested in that. Which approach you prefer, aggressive investment approach or a safe investment approach? Tell us in the comment section, and you need to remember that there are no buy or sell recommendations in this video. This entire discussion was only conducted for knowledge sharing purpose. If you find this video helpful, I kindly request you to like and share as much as possible, and don't forget to subscribe to my channel Diversify Investment. We will come up with next video very soon. Till then, take care. Thank you for watching.